Good morning, good afternoon, good evening, and welcome to the TGI. Thank God it's Friday, the 28th of October. Slightly late running, my apologies. Bull versus Bear webinar here. Steve Miley on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through in here today. Take a look at the calendar, take a look at both the macro calendar and the earnings calendar. Take a look at the macro fundamentals that are impacting markets right here, right now, and we'll take a look at the charts to take a look at any kind of potential trigger points for today. Some questions, Clinton. These are questions from today, right? So let me just read through quick. Let's do the questions first. Get those done. So from Clinton. Here's a question. I watched order flow while I traded during the last couple of hours yesterday. A number of large orders over 100 contracts on the ES started getting filled. Would that be a larger traders anticipating a breakdown? I'm just curious about the timing at the end of the down day at the key level of support. Oops, I meant to say that the orders were coming in between 3 to 3 to a larger than normal number of large orders. The level you pointed out yesterday morning. Yeah, I mean, I'll be really quite frank with you. I do not watch. It's not something that I use. I don't really watch order flow. But volume is clearly important regarding technical analysis. And if you're seeing a large number of orders around an important support or resistance level, then it's going to tell you one or two things, right? It's either going to hold that level and it's important. And if it holds that level, then you're going to get, either a rebound or a breakdown from that support or resistance level. And if it breaks there, then it's even more likely you're going to get more of an impulsive move. So all that volume does for me, right? All it does, if you see volume higher than normal volume around an important level, or any level, to be quite honest, but if it's around an important level, even more significantly, then that just reinforces that something's going to happen, right? Usually something's going to happen. It will either hold that level and you'll see a significant move away from that level, or it will break and go quickly away from that level as well. So all it means is that the market is not likely to hang around. When you've had a lot of volume around a certain level, it usually kind of has a tendency to then impulsively move away from that level. So that's what I would have to say on that, Clinton, right? It's not something I use in my trading within the moment. I don't do that. I do look at volume sometimes on a slightly bigger picture view, but not on the actual order flow within the day. I don't do that. But that's the interpretation with volume. If you see volume around a level, it means that level's more important, particularly if it's already a significant technical analysis level, a chart support or resistance. And if it breaks or if it holds, the market is then more likely to move away from that level a little bit more impulsively. I hope that kind of answers the question. First of all, I'd just like to just go back to this page. So we did the Trader Mind session a couple of days ago. Very, very, very well received by our trading community for those people that got on. And for those who have watched it subsequently, we've had really good feedback. I'm really glad you liked it, guys. We are planning to do another one of these in the next few weeks. Okay, so there'll be another one in November. Watch out for the details on that. If you didn't get to see it, you need to come here. You go to the members area, Trader Education, drop down in here, Trader Mind Sessions. It's the fourth in the drop down in here. You come to this page here. I'll send the link into the chat. So there's the link in the chat, members.tradeday.com, where you normally go in, trader-mind-sessions, and it's here. Okay, I know it's just got this holding page in here at the moment, and it says the live event has not started yet, but that's the recording. If you click in here, you see 59 minutes. It's just under 59 minutes, 43 seconds. Just under 1 hour. You can go and watch it there. Right. What have we had? What have we got coming up? We've had a host of European data this morning. GDP data out of France and Germany. A slight beat on the both the French and the German numbers in here. Okay, I've got a little article on that. I think in here, German unexpectedly grows as France, Spain slow. Well, actually, the France number came in line with expectation. German number. So we've actually had some positives out of Europe in here this morning with respect to that growth data. Okay, so from Europe, so that's definitely a little positive. Looking ahead today, now sometimes this is a little overlooked. PCE data, personal consumption and expenditure price index data. The Fed tell us it's their preferred measure of inflation, right? It's their preferred measure of prices. Okay, the market it never reacts. It always reacts more to CPI. Okay, but this is the number that the Fed watched. So it is important. It is starting to have a bigger and bigger impact on markets as we've gone through this phase of inflationary pressures. So certainly keeping an eye on that today. We've got that coming in just under 1 hour in 55 minutes. PCE data coming out of the US. We also get Michigan consumer sentiment. Again, a little bit underlooked. Okay, that comes at 10 a.m. Eastern time, and that is often also can be a market mover. It's always released on a Friday. It can also an end of day kind of thing, end of the week. Sometimes it's a little bit overlooked. So 10 o'clock, Michigan consumer sentiment. Watching out for that. Let's take a look at the micro side in here. I've got this on yesterday. Obviously, the big two are Apple and Amazon after the bell. Even though Apple beat, some of their forward guidance, particularly for year end, wasn't great. Okay, and Amazon missed, and their forward guidance was definitely negative. Apple actually hung in there. Amazon got hit. It didn't really help that came on the back of what we had from Google and Microsoft and and Meta earlier this week. So that big tech that we've had reporting has not been great. Okay, and it's dragged the markets down, as we know, over the last 2 to 3 days. Okay, so we've had significant risk off moves, tech pulling everything down. Nasdaq massive underperformer compared to, say, the Dow. The S&P obviously sits somewhere in the middle. Okay, so we've had and even with Apple beating both EPS and revenue in here, their guidance for year end was not great. And there's a couple of articles I have in here. So tech stocks wipe out, offset central bank pivot hopes. So yeah, pivot hopes but then equally there's a survey in here I've got. And if we look at what the bond market is doing, bond market is not particularly has shifted a little bit on that as well. So we'll come back to that shortly in here. And again in here, look, so Future Sync as grim forecast from Amazon Apple fan recession fears. So again, even though the Apple numbers were decent, okay, they did caution on revenue growth. Could see some pressures in the December quarter, but shares edged higher. So even though Apple hung in there, the forward guidance wasn't great. If we flip to today, oops, wrong calendar. If I flip to today, though, we've had ExxonMobil and Chevron, massive numbers from ExxonMobil and Chevron here, beating expectations. A couple of articles in here. Exxon's record-smashing Q3 profit nearly matches Apple's. On Chevron's $11.2 billion quarterly profit soars past estimates. Okay, so big numbers in here for the oil producers. No surprising, really, given where the oil prices are at, right? But big numbers out of the oil producers in here. So, but they've not had a massively positive impact necessarily into the major indices going into today, despite those positive numbers in here. 5 things to start your day. Let's run through this. So Twitter in the headline, now a private company. Musk has completed his takeover of Twitter. Amazon market value set to drop below $1 trillion today after disappointing earnings after hours. We've already covered that. Federal Reserve officials maintain their resolutely hawkish stance next week, laying the ground for interest rates reaching 5% by March. This is a Bloomberg survey. Okay, so this hawkishness they're talking about comes from this survey. Expectations for a 75 basis points hike next Wednesday, and then for half a point in December. Okay, which is what we're pricing in, right? It's what the market's pricing in. We go to our Fed tool. Here we go for November, set 3%. This has dropped obviously a little bit in here for the 75 basis point hike. And then December now, though, very much now looking for only a 50, right? This was all the way up here at one point, right? We're up in the 80s, 90s for 275s. Now the bigger chance is we have only a 50 basis point hike in the at the December meeting. But if you look at the peaking rates going into the beginning of next year, March and May, 475, 450, we're still at that 475, 450 area, not going above there. See, there's something just come into the chat in here, guys, from James. Yeah, I did want to mention that. Steve, can you please mention that we are expecting technical issues affecting resets, new accounts and dashboards? No dashboards updated last night, but we have pulled the data manually and it will hopefully update tonight. We'll keep everyone updated in the activity feed on the site. So if you're on in here today, guys, apologies for that. If you're watching on the recording, apologies. Yeah, we have had a technical issue beyond our control. Nothing that we've done. It's coming from third party. It's coming from outside our control. Don't worry about your dashboards. They will be updated updated. Hopefully this evening. It may run on obviously over the weekend. Tech department are working on that. Okay, so our apologies if your dashboard isn't updating. If you haven't had a reset where you expect, or if you're trying to open up a new account, okay, so we are having some issues. They are being dealt with, and James and the tech team are on that. Okay, let's go back to 5 things to start your day. So risk off day expected on the start in here today. We're looking for futures that are off, and we'll take a look at that in a second. And we've already looked at the data that we've got coming up. Covered most of these already in here. Tech stocks, wipeout, offset, central bank, pivot hopes. Amazon, Apple. We've already looked at that. Stock slump, underweight, a renewed yield surge. So let's take a look at that actually. So if we take a look at the yield chart in here, I'll go to the where's the interactive chart. We can look at the futures as well in a second. Actually, I'll bring that up while that one's loading. Let's go take a look at the futures market on the treasuries on the 10-year. Here's the 10-year on the daily. So you see we've had in here this higher yield move. We've reversed these trend lines. Higher price, lower yield move. We had a lower yield move more recently, slightly more, not dovish tone from the Fed, but with a slight back off in here on expectations from the Fed, slight softening from the Fed, slight, not improvement in the data, but inflation starting to kind of cap out and roll over. We don't seem to be having massively negative impacts into the consumer and into the labor market. So maybe we will get a soft landing. So the data sort of saying, yes, inflation slowing down. Maybe the Fed are going to be able to walk the tightrope, slow inflation down and not send us into recession. And so we've had a move to higher prices and bonds into lower yields. But you can see in here, overnight in here, we've seen a pushback lower in prices for treasuries and here, and that's obviously what they're referring to in that article. And if we go take a look at here we go in here. So there's the pop higher in yield, okay? A little pop higher, but it's hardly a surge in yield, right? So just going back to the article in here, yield surge. I mean, I don't think that's wrong, right? Renewed yield surge. I don't think so. Government bond rally fizzles in run up to FMC. Well, I think that's fitting a headline to what they want to tell us about what's going on in stocks as opposed to what's really going on in the bond market. That's hardly a bond rally fizzling. I mean, it's been up straight for, go back to the chart in here on the, it's been up for 3 straight days. A little bit of a setback's not the end of the world. Okay. So again, lazy journalism, in my opinion, there. What else do we have in here? Apple dodges tech route, even while warning of holiday slowdown. So, yeah, Apple held in, but nevertheless didn't go up, right? And everything, all the rest of the tech's down. And they did have a warning on future for the December period. We've already spoken about Exxon and Chevron surging higher, and Musk doing some firings already on that Twitter takeover. Fed seen aggressively. This is just a survey of economists from Bloomberg, so nothing more official than that. Bank of America says too early for pivot as investors flock to stock. Strategies see S&P 500 rally as a bear hug before a new Q1 low. So despite the rebound we've seen, despite the fact that investors have pushed back into stock indices, over the last few weeks in here as the market has rebounded, Bank of America is still saying that they expect this to be a bear hug, a swoon, as it were, a bear market rebound, a bear market rally, and then we will go lower next quarter. ECB official signal back against inflation is far from over. So the ECB, as anticipated, hiked yesterday by 75 basis points and indicating that there's more to potentially come. And we've already spoken about the German GDP data. What else have I got? Investors buy equities at fastest pace in 7 months. Again, investors point, that's that Bank of America global research, the same article we just discussed there. And if we look at what's going on in Europe this morning, we're kind of a little bit mixed. Mostly down, about 0.5% down in here as US futures are softened after that tech sell-off after hours. And if we look at where we are, we had a kind of mixed day with S&P and NASDAQ down yesterday. The Dow was actually up yesterday. S&P and NASDAQ down, and obviously down again this morning. NASDAQ leading the way. Tech really getting smashed in here over the last couple of days. Right, let's run to the charts. So we've already looked at treasuries. While I'm on this tab, I'll just do the the commodities. So we've got this kind of positive correlation still going on, not quite as strong as it was previously, but a positive correlation between gold and for that matter, to an extent, oil and the stock indices. So we've had this rebound in stocks, we've had a rebound in gold, a hesitant inside pattern yesterday, having had a couple of up days and now a down day as stocks have rolled over on gold. And we did get this inverse kind of threatened, really an inverse head and shoulders, like kind of double shoulder here, kind of double shoulder here, double head here. There's the neckline. The market flirted with the neckline, didn't really get above it. And then we've seen a slide lower in here. But you can see we've held above the shoulder here, and the market trying to rebound there. So maybe a little glimmer of hope in here. You'd have to say you want to probably play this from the short side, but a glimmer of hope from the last last hour of trading in here with the market rebounding. So, it's a little bit, I'm kind of clinging on to a kind of a bullish tone in here, but I mean, there are certainly some negatives in there as well. I would say if it breaks back down the current low, below the current low, it looks very vulnerable. On the top side, where does it need to get above? Well, it's kind of already reversed this accelerated trend line from overnight. And then this trend line that comes across, if we had the trend line, sorry, let me see if I can redraw this one, if it will allow me. No, it's not going to allow me to do that. Of course it won't. Let me get rid of that. Oh, I've lost my neckline now. I'm going to have to redraw that neckline in. So we've got the neckline for when we come back to it. So I'll quickly put the neckline on. Comes across there. But then you've got this down line here coming across these peaks. That's a long way from doing anything on that. I think the trouble in here, there's no obvious trigger, right? This is on a 30-minute chart. Even if I go to the 15-minute chart, there's no obvious trigger. I mean, maybe above these peaks here. So back above 1657, really, to be more positive in here. Could open it up to the mid-60s, but it really needs to break above that trend line. So slight glimmer of hope in here at the moment for gold. And if we go to oil, and here more positive on oil, really strong couple of updates, dip and a rebound in here today. So dip and a bounce in here. There's a strong couple of updates, boom, boom, and then dip and a bounce, and then again, look, dip and a bounce. If you can take out that peak there, I think that's enough to go long through there. 88.67 up through 88.67. This looks positive for oil. So oil looking more positive than gold relative. Let's take a look at the stock indices, S&P first of all. So yes, damaging, took out the lows from the previous 2 days yesterday. One, boom, boom, held above the third day's low, have had a slight rebound in here today. A little bit of a tricky one, just going back to the daily actually, because you've got the underlying up theme here, higher lows. Is this just a correction for the next swing, or is this more of a reversal? If we put the trend line on, comes off the low, we're still holding the trend line, right? So we're holding there at the moment. So back down through yesterday's low would also break the trend line. In fact, even before that. So let's step into the 15-minute in here, and you got this more decent rebound. I mean, I think really, back down through these, I would just say the breakout parameters are here and here. These are overnight breakout parameters. Down through here is almost certainly going to take you back down. Back down through this overnight low is going to take you down and be challenging the trend line, right? So down through the overnight, there's the overnight is all the way down there, but down through this one, I think opens up this. So below 76.75 opens up the low here at 57.5. Okay, but we've already kind of reversed. If we have a look here, get rid of all this old. I'm just going to get rid of all these tools. You've got the bigger trend line that comes across the top. We're a long ways from there, but the more accelerated that we've got down through, you'd say down through here, right? Wherever you're going to draw it, that one's way gone. Okay, the more accelerated one here, but then if you keep drawing these on, even the more gradual one, if you take something through there, that's all kind of reversed as well. So back up above that peak, this overnight bounce peak is 38.13. Through there, it looks bullish for me. So it's a little bit of a tricky one. Down through there, and then you've got trend line support that runs across here. I put these on. If you're more cautious, is this one that comes across here you could put in. Why is that not working? Come on. Oh, I know. I think it's catching the bottom of the... Oh, I know why. No, it's catching the bottom of the graph. That's why. There you go. Okay, and then you got the more accelerated localized one from the overnight activity runs through here. So yeah, if you want an earlier trigger point, it's back down through this one, which is almost just below this little low from 30 minutes ago, which is 37.90.5, if not down through there at 76.75 top side. Yeah, I mean, I wouldn't want to venture along until I was back above there, which was, what did we say, 38.13. Okay, so that's S&P. Let's take a look at the NASDAQ daily. Obviously, more damage. Not took out the lows from the previous 1, 2, 3 days, and I think just fourth day. Did we get through there? I think we might have just held. The low there was 935.5. The low here 921.5. So you just pipped below there and then bounced. Okay, so it's kind of clinging on, but not really. Certainly damage. You look for more damage in here. More lower lows, lower highs. But again, getting rid of all the old analysis. Market's trying to rebound. So you got that big spike lowers. That obviously the spike lowers after hours trading. That this is basically Amazon boom, and then bounced and then roll, but trying to rebound now. So the trend line off the top in here, I think, works quite well. I mean, I think you have to be watching this. If it gets back above there, and so above the overnight, this rebound peaks, you've got dual rebound peaks here as well. So back above 11,190 basically. Yeah, 11,189. So back for 11,190. This all looks a little bit positive, and then it's going to be attacking quite quickly. 11,225, the peak there, and then that's the impulse level. That's where we came from, around 11,250. Is where we came from after the bell on the results. Right, so there's a whole host of resistances in here. If we can take these out, it looks more positive again. So we've got basically 1189, 1190, these peaks here. Then you've got the trend line, which currently comes in around 225. And then you've got really where we came from. I mean, the peak there up there is 284.25, but the impulse point from after 9 p.m. comes from like 250. So for 250, so 225, 250 is going to be really important. It's both the trend line and the impulse point from last night. Okay, so keeping an eye on those. All right, everyone, I'm going to wrap it up there. As ever, I'm going to wish you a great trading day. Just to reiterate, apologies, dashboard's not updating. There is an issue with resets, new account openings. Apologies for all that, beyond their control. Tech team are working on it. Hopefully we'll keep an eye on the activity feed. We'll give you an update in there. And other than that, I hope your trading goes well. You won't need a reset because you're going to trade well today, guys, right? So don't worry about the not being able to reset. The dashboard will sort it out. Keep an eye on your own daily P&L. Keep those stops tight. Okay, and watching out for the data that we've got coming up in 35 minutes. All right, have a good one. Have a great trading day. Have a great weekend as well. TGI Friday and all that. And I'll be back with you for another Bull versus Bear webinar on Monday.